Welcome, everyone. I'm Angelo Robles to the Angelo Robles Podcast. I'm also the founder and CEO at Family Office Association. On the podcast, I look to distill the best practices and best ideas of among the world's most successful investors, families, and their family offices. I hope to provide thought-provoking opinions and feature amazing thought leaders to our listeners and viewers of the podcast with an eye towards the future of successful investing, families, and their family offices. Today's subject is titled The Digital Transformation of Money and Finance. Subtitle, Most family offices are significantly underprepared. We have a very special guest today that many of you are familiar with. That would be Brian Kelly, founder and CEO of BKCM LLC, a digital currency investment firm, and, as many of you know, a CNBC commentator. Brian, it's a pleasure to see you again.
Yeah, absolutely, Angelo. Great to be on. Thank you for having me. It's been too long since we've seen each other, but at least we have this digital medium that we can see each other over the video.
Yes, way more efficient, if not quite as charming as face-to-face.
That's right.
So why don't I begin? I'm going to read a quote. I know I did this yesterday when I had a Navy SEAL on. So intriguing how a Navy SEAL and you, Brian, I'm kind of tying this a little bit together. And this is only a part of it, a tiny part that I wrote this summer, but it expresses my feelings that would apply to what we're going to talk about today. The rules of community and global engagement, as well as risk reward, are changing rapidly, especially during this crisis. Massive opportunities exist for those families and their family offices that start the shift now versus waiting. Many family offices will find that their current playbook does not work optimally. It may work, it's just not going to work optimally anymore. So on that kind of a early foundation, Brian, I mean, to me, this looks like a digital transformation of money and finance is well underway. I think it'll be quote unquote bigger than the internet, and I'll get to some statistics on that later. And, we're going to cover a lot. This is not just going to be a conversation about Bitcoin, Ether, and other crypto, although that will be important to it. But the whole ecosystem that I'm talking about is blockchain, central bank digital currencies, DeFi, tokenization, stablecoins, non-fungible tokens. So I don't know how we're going to cover all of this in about 52 minutes, but we will try. Why don't we start with you giving context to kind of what I said, the new digital era and family offices and investors needing to adapt and adapt quick if they really want to pounce on the opportunity that appears to be available.
Yeah, well, sure. So way back in, this is eons ago in Bitcoin time, but back in 2014, I wrote a book, but then I wrote a paper that was entitled "The Future of Finance is Flat." And what that paper was about, that white paper was about, was the idea that this technology removes the intermediary from all of finance. And so that flattens out finance. You no longer have this very tall hierarchy where you have to have multiple intermediaries signing paper. In some parts of our financial system, they still use fax machines to verify transfers. It's crazy. And if you've ever done a residential real estate transaction, the amount of paper that you have to sign is off the charts. So, when I first kind of stumbled across Bitcoin, I was a skeptic, but really my aha moment is that break this down. What you have here is a new economic system, a crypto economic network on top of a new technology that allows you to flatten out finance. And I said, well, geez, I'm in finance. I better know everything about this. This is going to be really important. And it's probably going to do to finance what email did to the post office.
Yeah, wow. Yeah. And we know what it did to the post office. I see it in my own backyard. So I'm going to begin a little basic because honestly, the penetration among wealthy families and family offices is in the lower single digits. So there still is an educational aspect of it to go here. And I'm actually, probably the most common questions I get are how to easily buy crypto and how to store it. And we're not going to go too deep into wallets, which actually is a more complex than it needs to be, and one that I probably wouldn't do it justice in 2 or 3 minutes. But for those that are listening in, so I did get a text from one of my listeners basically stating, Angelo, how could you explain what Bitcoin is to my grandmother? Because once someone like that gets it, then, that could really take off. So to me, by the way, as I've discovered, as I've immersed myself and I've done all this, by far the easiest way to buy it to me is Square's Cash App. It is just so easy. If you don't have it, you could download it on your phone in 3 minutes. You could purchase Bitcoin, which I did, a small amount, in about 1 minute. Now, you do have to go through know your customer guidelines when you go to move that around, which is a little bit more work of taking pictures of your driver's license and answering some questions. But they actually, of all the thought leaders out there, they actually had a relatively simple description that I like. Bitcoin is a radically new way to store and transact value, period. Unlike traditional financial networks, Bitcoin is able to operate without central authorities or trusted administrators. That makes Bitcoin the first ever open and borderless currency. If you had to explain it, Brian, to a millennial's grandmother, let's use that example, what would you tell them that Bitcoin is?
I've always gone back to the analogy that it's like a giant spreadsheet, and every cell in that spreadsheet is a Bitcoin. And if you want to use that particular cell, you have to buy a Bitcoin. That opens the door to that cell, and you can store something in that. In the case of Bitcoin, it's value, and that value comes from the price that we all assign to it. If we think it's valuable, then it is valuable. I don't think it was Keynes, now I forget who it was. I said that all currencies are a matter of faith. I don't care if it's a euro, I don't care if it's a pound sterling, I don't care if it's a Roman coin. The value of that, and gold for that matter, comes from the fact that we all as a community agree this is going to be valuable, and if I accept it, I'll be able to buy something tomorrow with this piece of value that I have. So explaining to a grandmother, it's basically just a big spreadsheet that allows the entire world to see what transactions are going on, does it digitally, does it without any intermediary, and it just keeps track of who owns what.
Yeah, no, that's really good. I mean, one of my favorite shorter but a little bit more technical definitions is from Jeffrey Tucker, more on the value. Bitcoin's value obtains from its underlying technology, which is open source ledger that keeps track of ownership rights and permits the transfer of those rights. Bitcoin managed to bundle its unit of account with a payment system that lives on a ledger. Again, decentralized and limited in number, eventually capping off at 21 million. Unlike other currencies, which are correct, because nothing's backed by gold anymore, is the full faith and credit of the government. The paper's worth a penny, but it could be $1,000 bill, whatever. But it's based on the full faith and credit of the government that is printing more and more money. And, that's more of a macro issue. And we've had Lynn Alden and Raoul Paul and others on to discuss that issue. In terms of, okay, so again, the most common questions I'm getting, even from the richest of the rich, is like, where do I begin? So I mentioned Cash App. Obviously, there's regulated exchanges here in the US, which would be the way to go. You want to be regulated for a variety of reasons. That it's a bit of the wild, wild west. And never forgot what happened to an offshore entity was in 2013 in Mt. Gox. So although I am a libertarian, I want them to be regulated. I think it provides it's important when it comes to things like quote unquote money. What are some others, exchanges or ways that people could do an initial foray into Bitcoin and perhaps other cryptos?
Yeah, so for me, it's all about how much you want to buy, right? And how important it is to your overall portfolio. I've always said, you want to allocate 1 to 5% of your investable assets into Bitcoin. And the reason why I say that is if we're all wrong about this, and for some reason Bitcoin goes away, and that's not my view, I think we're well past that point, but let's just say that it does go away for whatever reason, at most you're going to lose 5%. That's not going to change your life. But if we're all correct about this, and this is a 10 to 100x investment opportunity, then that 1 to 5% is going to be a meaningful amount to you in your portfolio. So with that said, with that framework of how much do I allocate, there's a lot of different ways to do it. If you want to buy, what I would say is under $5,000 or $10,000 worth of Bitcoin, I think Square's great. PayPal is now in the game. You can go to Coinbase if you want to do maybe $25,000. Gemini is another good exchange run by the Winklevoss twins. They're all of those have trust charters here in the U.S. So you can do that, I would say, for up to 50,000. Once you start getting to bigger numbers, you might want to, and it's a bigger part of your portfolio. And if you're a family office or you're a CIO of a family office and you have a fiduciary responsibility, you're going to want to go to something like Fidelity Digital Assets. They are regulated, trusted. They have custody. They have cold storage, all the things you hear about, and they make it real easy. So those are the type of things you want to look for. Downloading a wallet by yourself, although it's not very hard, it can be intimidating. And I would not recommend to do it with your first $1 million purchase, Angelo, but maybe on your second or third $1 million purchase, you feel comfortable downloading the wallet.
Yeah, and there certainly are risks with that, some of them cyber-centric, and we'll save that for a discussion at a different time. But I completely agree. If you're going to be more of a family office level, becoming institutional, probably in my opinion, about 100,000 or more, then you're likely going to use what we would know as an over-the-counter service. And some of the exchanges that you noted, from Kraken to Coinbase, et cetera, they all have that. You get personalized service. And then you likely want to use deep cold storage custody. And you mentioned Fidelity, who's great. NYDIG's another one. Coinbase has a custodial service. There's a little bit of the devil in the details. And again, we're not going to make it a custodial, 2-hour discussion that will lose the audience really quick. But these are really, really important topics. Let's talk a little bit. So a couple of days ago, some new Treasury regulations were proposed. And there's a little bit of bifurcation in the industry that in some ways this is actually good. It may even spur more institutional investors and make it feel more like part of the system. But the maximalists, those that treat Bitcoin like a religion, feel like there's probably going to be too much oversight. Give a brief overview of the proposed regulation and a little bit of maybe the arguments from both sides.
Yeah, sure. So, I kind of straddle the fence on this, having gotten into Bitcoin in 2013. I really gravitated to the idea of this open and free financial network and payments network with little to no regulatory oversight. I thought that was great. I think that for innovation, you need to have at least a sandbox type of approach to that. Now, the other side of the fence that I straddle is the more regulatory clarity that you have, the more likely you're going to have larger institutions come into the space. And of course, larger institutions buying up more Bitcoin, as we've seen with, MicroStrategy and multiple others, the price of Bitcoin goes up, which as a Bitcoin investor and a Bitcoin hedge fund manager, I clearly want to see the price go up. So it's a bit, I straddle the line. So the rules that came out, or the proposal, as I understand them, are basically, if you have your Bitcoin at a regulated hosted wallet, so one of those exchanges we mentioned, Kraken or Gemini or Coinbase, if that's where you bought your Bitcoin and you're storing it there, if you want to transfer it out of that exchange to your own cold storage and hold it personally, you're going to have to verify KYC, AML, that, hey, I'm moving it out of this exchange to this address, and this address is mine. And so, it's not a terrible burden. However, if you want to foster innovation, the more steps that you have to take, will not help that. So there's this. We're in this race. I really see it between Asia, which has really taken a lead on this, and U.S. and somewhat Europe, where you want to have, this is a new technology. So what you want to be able to do is allow people to innovate, allow people to experiment, with also understanding that those innovations and those experiments often come with failure. And so as long as I think people recognize that, hey, I'm going into this regulatory sandbox where I might not have the typical regulatory protections, I think you can foster innovation. Now, on the other side, you certainly don't want nefarious characters in there. You don't want nefarious things done with the Bitcoin. That is, has long gone from the amount that people use Bitcoin for nefarious purposes. I think it was MIT who did a study that said, Bitcoin is used in illegal transactions fewer times than actual $100 bills are. So, the idea that this is kind of only for criminals is completely bunk and completely out the door. And a little bit more regulatory clarity allows a pension fund, allows an endowment to make an allocation to this without having to worry about, okay, 6 months from now, my board's going to call me in and say, hey, you bought this unregulated investment and now we're in some sort of legal trouble. So I think it's helpful, but I certainly understand the Bitcoin maximalists, the OGs in the space, how they want to keep it open and free and free of excessive regulatory action. That being said, I think this is what adoption looks like for a financial asset.
Absolutely, completely agree. And I understand their point of view as well. And part of me wants to maybe lean more to their side, but you look at it, one of the concerns about Bitcoin and crypto were, yes, of course, there's risk besides volatility, nationalization of Chinese miners, government intervention, super high taxes, quantum computing. And that's one of the reasons why I'm closer to 1 to 3%, you're more 3 to 5% until there's more clarity to limit your exposure. But to me, and maybe I'm reading too positively into it, this is a little bit of a stamp of approval from the government. Mm-hmm. So that one concern about, oh my God, could they really come down heavy on it? And that's debatable because of the First Amendment, but they could call it a currency. They could possibly, but now there's, the incoming US Senator in Wyoming, Cynthia Lummis, who's very knowledgeable and an advocate and an owner. There's institutions getting involved. There's Fidelity, there's NYDIG. There's news about some of the, Goldman and JP Morgan have digital assets division. It employs probably 20,000 plus people. It has millions of users. It wouldn't be good from a political and voting perspective to do something to it. But this puts to me even more of a stamp of approval that risk of government really being deadly to it dropped from probably under 1% to, in my opinion, like 1/100th of 1%. And maybe I'm wrong. I mean, maybe I'm underestimating that a little bit. Let me go back a little bit to, okay, so from a family office or successful investor, understand the purchasing process, understand the exchanges, but there are going to be some people that do prefer other methods that are just what they're more used to or easier. One day an ETF will be here, and that could have disadvantages, like the gold ETF compared to physical gold, but that may be a year or two or longer out in the future. There are other opportunities, the Grayscale Bitcoin Trust, and there's funds like yours, like Pantera, Anthony Scaramucci's coming out with one. So there are successful investors that maybe don't want to go through what they perceive as some of the rigmarole and simply just want to be an LP investor. So that is another option for them as well.
Yeah, for sure. And, if you look at something like the Grayscale Trust, and I love everybody over there, they're fantastic. That's a great way to get in, particularly if you want to hold it for long term. And it's a very familiar way. If you have a family office or you're a successful investor, most of all the paperwork that you're going to fill out is something you've already filled out. There's nothing particularly new about it. When you go the fund route, like something like ours, for us, we're trying to beat the price of Bitcoin, and we invest in, more than just Bitcoin. So you get, I don't want to call it diversification because these assets are all pretty well correlated. But you get, I like to think of it as kind of a call option on the upside of the space. So that's one way to do it. You can do it. I think Bitwise now has a fund out there, if I recall correctly. There's multiple ways. I think the important thing to note is, when we talked back in 2018, none of these things existed except for Grayscale. Now you have multiple different ways. If you're a professional, successful investor, more inclined to go with a no-name brokerage firm, there are many, many ways that you can get into this space and get that exposure.
I mean, I'm even skipping over what has changed since I last saw you, everything. And that was a little over 2 years ago.
Yeah.
Tudor Jones, Cathie Wood, Bill Miller, Stan Druckenmiller, Mass Mutual, JP Morgan and Goldman. JP Morgan, I believe, has over 100 people in their digital assets division. The First Bank with Kraken in Wyoming. to other institutional investors getting in. There's just so much. I mean, this industry adapts so very quickly, which is both exciting and a little scary sometimes. I do want to make note for those that are listening in live or watch it on video or hear it, that myself and a gentleman who actually is on the live member Zoom today, a family office named JJ Sowers, we co-wrote a pretty significant white paper. I'm basically calling it an ebook, why the world's wealthiest families and their family offices should consider Bitcoin and crypto, and subtitle, Engage in the New Digital Economy of Crypto, Blockchain, Decentralized Finance, Tokenization, Stablecoins, and Non-Fungible Tokens. So although it really is more exclusively to my members, if you wanted to reach out, I likely could be in position to share it. It will one day be a online link, so it'll be easier as opposed to a near 50-page PDF. But for now, it's a PDF, and it's better than nothing. Let's talk a little bit. I thought about whether I wanted to cover it or not, but I think I have to. And that is going to be the news came out that the CEO of Citi, it must be right, said that they're working on digital currencies for governments, effectively central bank digital currencies, programmable money. There's a beauty to it. It is wickedly efficient. It may eliminate, potentially, may even usher in a flat tax system. There's lots of potentially good benefits to it, but because it's a centralized network and because they could always make more, unlike Bitcoin, there's tremendous differences than Bitcoin and other cryptocurrencies. And the big one, because it's centralized, it is programmable money. They see, or if they want to see, every transaction that you make, and they could charge people. I mean, what some people say are different people could get different interest rates. You're leaving too much money in there. You're not putting it into the stock market. You're not spending it, your credit or whatever it may be. Again, there's a beauty to it. And it's inevitable, but there's a scary aspect to it as well.
I mean, of the central bank digital currencies, it doesn't scare me whatsoever. It's just it's electronic money. We effectively have that already. So I mean, it's fine. It's great. I'm glad the central banks are getting involved in it. I would not call them cryptocurrencies by any means.
No.
It's electronic money, and the ledger is on a central database. Frankly, Bitcoin's inefficient, but it's inefficient for a reason, in that you want to have massive security around a decentralized network. If you're talking about the Fed and the Bank of England and any other central bank, well, then you don't need all that massive security necessarily. You already have it built. And so why use a blockchain in general? Because blockchains can be inefficient, but again, inefficient for a reason. I don't think it's a threat to Bitcoin at all, because as you mentioned, you're going to be able to more easily print more money. And I mean, imagine this. Let's say there's a central bank digital currency. And I still don't want to call them digital currencies, but everybody is. So I'm forced to go along with consensus. But let's say we have that, and you have $1,000 in your digital wallet, of $1,000 in your digital wallet. Well, effectively what's happening now is the central bank is printing money, and your $1,000 at the end of the year probably will buy you $998 worth of goods. Well, what if the central bank just simply took $2 out of your bank account and just all of a sudden you wake up one day, your $1,000 is now $998. It's the same thing. But I suspect if people wake up and see the central government and the central bank actually taking money out of their bank account without any notice, that's going to be a huge issue for these things. I think they'll do it because I think they're going to try to boost inflation by any means possible, which means printing a ton of money. But the same effect is, let's just take some money out of people's digital wallets. Then they'll have to spend it.
Okay, I mean, let's get a little interesting. So the central bank in the US is the Fed, obviously overseen by the government, et cetera, but theoretically privately held by a series of banks. We could probably guess who those big successful banks are. Central bank digital currencies will be impactful to banks in a negative way. I think the mid-level and smaller tier banks are going to be very threatened and in trouble, and they have been, I think, for a while anyway. But The creative ones that are large and have influence, Goldman Sachs, JP Morgan, they already have digital assets divisions. They're looking into things like stable coins. They're going to be involved in this community. They're going to start to be custodians very shortly. I think sometime next year, we'll start to see the news of like a Goldman Sachs digital assets custody and stuff like that. So these are all positive developments, and some of the bigger banks are actually way more creative, ironically, than we give them credit for. And they have political might. They're going to be involved in this process. To think that they're going to go away, even with DeFi and all that, which we'll get to, I think is just very, very unrealistic. What do you think the role will be of banks moving forward?
Yeah, I mean, So, at the beginning of this, I said, this is going to do to financial services what email did to the post office. That doesn't mean that those banks are going to go away. They'll probably need less office space. I've joked, my office used to be on Park Avenue right next to JP Morgan, and they're tearing down their own building and rebuilding it up. And I've kind of tongue-in-cheek joke, but I'm somewhat serious about it. By the time they're done rebuilding that building, they won't need as much office space because crypto economic networks will be DeFi, decentralized finance, will take over a lot of those activities. And I think banks will be a very big part of that. I don't think banks are necessarily going away. I think just their role as the person who moves money around the world is going to be diminished. But, as you state, they are incredibly creative. They have a profit motive, and that is very motivating. They have shareholders they have to think about, so they'll figure out ways to survive. This just happens to be a new way to move money around, so maybe they don't do that as much anymore, but they can still do plenty of things. One kind of thesis that I had, and this was part of the future of finance is flat, is that you'll probably see this separation between transactional banking and credit banking. So transactional banking, simply the idea of just moving money between people, will likely be done via decentralized finance or just simply Bitcoin. Credit banking, where I'm loaning money out or I'm looking at assets and loaning against that, we haven't completely automated that yet. So I think that's where banks can probably continue to play a role and maybe even play a bigger role, regardless of what digital currencies do.
And you mentioned it. Let's get into it. And again, I think my audience, it's going to be a little newer to them. So maybe you'll start with your definition and maybe outline a little bit of the promise of what could come from it. And that would be decentralized finance, known as DeFi.
Yeah, my definition is really simple. It's peer-to-peer finance. So what we've seen over the last year is this explosion of decentralized finance. And think about that as anything where the middleman, the intermediary, is removed. So we started with decentralized exchanges. So we mentioned Coinbase and Gemini and Kraken. Those are all centralized exchanges. There's a corporation behind them. They basically facilitate the orders. Brian sends a Bitcoin into the exchange. He wants to sell it. Angelo wants to buy it. Kraken puts the orders together. They process it and put in your accounts. Decentralized finance, we simply go to a decentralized exchange. I put my Bitcoin on that exchange. Angelo comes along and buys it from me without any middleman. That's what we saw over the last year. That started to gain a lot of traction. Then we saw a lot of these lending protocols and so-called yield farming and all these things. To me, that was really the birth of the crypto bond market. And, so just to give the viewers an example, instead of just trading the asset, let's just say I want to loan out my Bitcoin. Angelo, you need some Bitcoin for whatever reason. Well, instead of going to an intermediary, an OTC desk, a Goldman Sachs, or whatever, I simply loan it out to you. The credit decision is made via a smart contract. And if you don't pay me back, there's collateral that's backed up, that's locked away. Again, all decentralized, all done with a software program. So in theory, it should be better, faster, cheaper, right? And that's any innovation has to be better, faster, cheaper. So in theory, that's what that is. So we saw the crypto bond market develop in 2020. Now looking forward, what are we going to see in 2021? We will likely see the crypto derivatives market, the decentralized derivatives markets. There's already plenty of protocols where you can trade futures, you can trade, in fact, they're trading, actually it's not on a protocol, but you can trade effectively anything, decentralized. And then I think you'll start to see some decentralized money management. So protocols where I put my Bitcoin in, I want that Bitcoin divided into some sort of index of assets. The smart contract actually does that calculation, splits the Bitcoin up, makes the sales, buys the other assets, and boom, all of a sudden you have a new portfolio that is diversified among crypto. So I think that's the progression of it. It's really, sometimes, new technologies, people make things more complicated than they need to be. All it is wherever there was a intermediary, insert this software program, which is a blockchain and a cryptocurrency, a token attached to it. And that can potentially remove that intermediary and do it better, faster, cheaper.
And actually, on that note, speaking of tokenization, and again, coming at it from a beginning to lightly intermediate level, how would you define that to, a wealthy individual, a family that is looking to understand that I may own something, a physical asset, perhaps real estate, and what is tokenization and how may that benefit me as a seller or a liquidator as well as a buyer?
Yeah, so probably the easiest way to think about it is if you've ever done a residential real estate transaction. You get this stack of papers. There's two lawyers on either side. There's title insurance. There's, you name it. There's a million different intermediaries there. So let's just say we tokenize that real estate. And what does that mean? That means that, okay, I take my house and I issue a token on Ethereum that says this is BK's house token, okay? It proves that I own it today. So now I don't need a title insurance, or I don't need a title search. I can transfer it to anyone. So I don't really need the lawyers there to watch me sign a bunch of papers to prove that I signed it. So that goes away. I maybe need a real estate broker to open the door so I can see inside the house. But I don't really need a real estate broker to set the price, because that'll be done on an exchange. So the market will set the price. So it just streamlines everything when it comes to tokenization. And you can do it with any asset in the world. You can do it with stocks. You can do it with private companies. You could do it with old tires. Whatever you want to do, you can tokenize it. Now, there is a caveat to that. When you're tokenizing an asset, you're starting to insert an intermediary. You have to trust somewhere along the line that when Brian Kelly tokenized his house, that he actually owned it, right? So it's that garbage in type of thing from computer science. So there at some point, maybe it's at the beginning, there has to be a verification that I actually own the asset and that I continue to hold the asset when you're tokenizing it. So it's a little different than cryptocurrencies. It introduces some element of risk that something like a Bitcoin doesn't have, but it could be an incredibly efficient way to kind of streamline finance.
And that goes to the whole thing that I said in my open, and even looking at it from a, successful investor perspective. Let's take a little bit of a step back. Remember on, was it the Today Show in 1994 with Brian Gumbel and Jane Pauley, like what's that symbol for an email? And they made a commercial about it a couple of years ago and laughed about it because it was just so, and it was really only 25 years ago. So right now, approximately 1% of the world has had even the littlest of experience in Bitcoin. And that does relate to 1995. About 1% of the world had access to the internet. Now we don't even think twice about it. And just think, the iPhone is only 12, 13 years old. It feels like, wow, how do we get by without that? And now with Gen Z and millennials and exponential growth in technology, learning, and comfort, this is all happening quicker and quicker. It's not going to take 25 years. It's not going to take 12 or 13 years. It's happening literally at the moment. So questions that I get from the families are, yeah, I wish I got in like 5-6 years ago. Am I too late? I'm like, too late. It's probably still somewhere around the first inning, whether it's the top or the bottom, using a baseball analogy, you still have an opportunity to put in the time, educate yourself. That's why I hate the excuse, I don't invest in what I don't know. That's unacceptable. You're going to miss out on too much opportunity here. You got to start to know. How do you feel about that? About putting the toe in the water and then ramping up your knowledge and being comfortable to move forward?
Yeah, so I think the idea of people saying, I don't invest in what I don't know is ridiculous. Because if you own Google, I don't know how the Google algorithm works. I couldn't tell you how to do it, but boy, I'll buy Google on the stock exchange. So, I mean, that's a ridiculous statement that I think people need to get out of their head, because they'll miss a lot of opportunities. You're not going to understand it. That's investing. That's what we do. You're making decisions on a minimal amount of information. You don't have all the facts, and the facts change over time. What I say to people is, listen, I came up on Wall Street in the 90s. I cut my teeth trading the internet stocks. Things were going all over the place, but frankly, I was too young, probably a little too immature, and didn't really have the money to take advantage of that. When I came across Bitcoin, to me, I said, well, I missed the internet. I'm not going to miss Bitcoin. And I learn every single day about this. And if you think about, you mentioned the iPhone, and you think about that, if you think about when Steve Jobs came up with that, could you imagine? And I don't think he could have, even as smart as a visionary as was, I don't think he could have imagined that in 12 years, you're going to be holding a handheld computer that you can stream live video of somebody in Hong Kong to somebody over in Turkey without any hiccup, and it would be on your handheld computer. There's no way anybody actually thought of that. I mean, maybe a couple people. So when I think about Bitcoin and what it's going to be, and crypto and what it's going to be, I tell people, I don't know, but I know that when you give technology like this to human beings, they're incredibly innovative, incredibly creative, and it takes on a life of its own. And so, yeah, dip your toe in, get used to it, get comfortable with it, but also understand that you're not going to have all the facts. And by the time you do all have all the facts, the investment opportunity is over.
Yeah, for sure.
Yeah.
Apparently, someone who knows a thing or two about the subject, I got a text in as a question to ask you. DeFi mergers like Yearn Finance merging with Sushi Pickle Cream Cover, is this DeFi's version of the concentration of power? We're getting a little deep into the weeds now, I know.
Yeah, no, it's a great question. And so I view all of this stuff as pure experiment. Some of it's crazy. Some of this stuff is going to look very much like the 2017 ICO boom, and there's going to be some junk out there. And then there's going to be these survivors, right? And they're all just trying these different ways. And what'll happen is, over time, whether it's the mergers and acquisitions and mergers that are going on right now, or something else that I haven't thought of, the good ideas, the sustainable ideas, will stick around. So to answer the question, I don't know if it's consolidation of power. That's what people do. That's what human beings do. But guess what? We have this technology that's decentralized, and anybody else can copy it. Therefore, it creates this incredible competition, which frankly, I think is incredibly motivating, incredibly innovating. And I think even if there is a concentration of power, the market forces will come about and copy what Yearn's doing if they can. Yearn's got to build a moat around themselves. So far, they've been able to do it with their innovation. They're kind of some of the first to really do some of the things they're doing. But somebody else will come along and think of something better, faster, and cheaper. And we'll all benefit from it. Not going to be without pitfalls, not going to be without, scams. So, again, be careful going into this, but this is the experimental phase. We're figuring out how this new financial network works.
And another question, opinion of ambitious projects like Dfinity, Filecoin, and Polkadot.
I love them all. So in general. So I think even, it's probably the easiest way to answer that is to say, there are Bitcoin maximalists that think there is only going to be one blockchain and everything's going to be done on top of that. Bitcoin's my first love. I will always have a special place in my heart for Bitcoin. It is my largest holding in my personal portfolio. So I love Bitcoin. I do think that there is a space for other chains that specialize in certain things. And so, as I said before, Bitcoin's incredibly inefficient, but that inefficiency gives you security. If you are less concerned about the level of security that Bitcoin has, then you can tinker a little bit with it, and you can do stuff like Filecoin. I think Filecoin's really amazing stuff. I think Dot's amazing stuff. We're also advocates of Cosmos is doing some amazing stuff. The interoperability. I mean, the example I give is, way back when during email, when I was a youngster, if you had a CompuServe account, you couldn't send an email to your AOL.com account or to somebody else's AOL. common account. And then all of a sudden interoperability came and email exploded. So I'm really excited about interoperability over the next year or so. Again, I don't know what people are going to do with it, but I know when you give them a tool like that, and I look at other industries and what's happened, that industry explodes. So I feel the same way about DOT and Cosmos, and love what Filecoin's doing.
And one subject that we didn't cover and give a definition to, then give the audience some context, is it's one of my favorite names in this community: non-fungible tokens, NFTs. Talk a little bit about that and how game-changing that this is.
I love NFTs. Now we're not there where, we're not quite there yet. But so for people who don't understand, what is a non-fungible token? It is a token that represents a single digital piece of value. So right now, things like artwork, digital artwork, are being sold. It could be a song. You might digitize the song, and the NFT represents ownership of that particular song. And then every kind of revenue stream from that can basically come to the NFT, whether there's a contract that allows the money to be transferred or the price of the NFT goes up. So I think they're incredibly fascinating. Bringing it back to, what people at home might think about what the reality of this is, to me, I think the huge benefit here is, imagine if somebody like Nike had a non-fungible token that allowed you to buy a pair of special Air Jordans that you could put on your avatar online. That, to me, is the real promise of it, is right. You have this non-fungible token. You can verify that there's only 10 pairs of this digital Air Jordan out there. I can buy it and I can put it in my digital closet. So, I view, and maybe this is 20 years away, I don't know. I kind of view non-fungible tokens as this easy way. Is you have your wardrobe that you wear out in the actual world, and then you have your digital wardrobe that is really basically a collection of non-fungible tokens that represent different items of digital clothing you can use on your avatar wherever you are online.
And I have several more questions left, but I will remind our live participants today to ask away. So feel free, especially during the chat feature of Zoom, to do so. This one gets a little complicated for some people, but I think it's important. Let's discuss a little bit of stable coins. And if you don't mind, I'm going to make it more complex. I'm going to throw in Diem, formerly Facebook's Libra. I think that plays into this. And if we want to go a little too deep in the weeds, USDC, Circle, and how this is all interplaying out, and government involvement.
Yeah. So stable coins are interesting. I have trouble, and maybe somebody out there can explain it to me someday, but I have trouble seeing the long-term potential for stable coins if you're going to have central bank digital currencies.
Yes.
To me, I don't see how they work. So stable coins are great right now, particularly when you're trading, particularly when you want to do something on a weekend. You want to interact with a decentralized finance contract, an Ethereum smart contract, and you want to do it with US dollars. They're fantastic for that. They're this digital dollar that's out there. And I think DM probably falls into that role. I think they're really essential part of the ecosystem. That being said, if you have a central bank digital currency that plugs right into your ecosystem, I don't know why a private stable coin would exist. I could be wrong. I've been wrong before. Shocks me every time that I'm wrong, but every once in a while it happens.
Wow, did I get a question in that really does not relate to what we're talking about today, but I think it's funny. I'm going to ask you about it anyway. Right. This is a little bit of a conspiracy theory type question. Ask BK his opinion of the Plunge Protection Team, PPT. I actually do know the mystery of this, if it's real. Were they called upon in March of this year by the US government to stabilize the stock market?
Oh, so I love a good conspiracy theory as much as the next guy. So one, I have absolutely no idea if they were called upon, but I suspect there is the president's what is it called? The president's committee on stable markets or something like that. So there is a group of people that get together and make sure that the stock market itself doesn't get out of whack. I would think that back in March, we had so many dislocations in multiple different markets, bond market in particular, the US Treasury market, which is essential for the whole financial system to work, that I would suspect there was if it wasn't direct government intervention, there was a wink and a nod that, listen, if you're a investment bank and you go and stabilize these markets and you happen to get hurt, you're not going to get hurt that bad, and the government will be there. I don't know. What I do know, or what I do think, let me rephrase that, is that as part of all of this money printing, I said it about a year or so ago I said it basically, and maybe it wasn't quite a year ago, but back in March on Fast Money, I think when they're done with all of this money printing, they are going to be buying ETFs and stocks, just like the Bank of Japan does, just like the central bank, the Swiss central bank does. I think the Federal Reserve is going to be buying stocks. It's not too much of a step from buying corporate bonds to simply buying ETFs. Now, I personally think that's ridiculous. I think it's a terrible idea. I think it increases inequality. It's a terribly inefficient use of the money that we have and the printing press that we have. But that, what BK thinks doesn't really matter to politicians, because you know what? Politicians want to get elected, and the more money they give out to their constituents, the more likely their constituents are going to vote for them. So I do expect to see an official plunge protection team via the Federal Reserve sometime in the next several years.
Yeah, no, that's a great answer. And yes, likely that makes sense. Again, I mentioned earlier the Treasury regulation, which arguably could have been worse, but maybe a little bit more oversight than some people would like. But that there are up and coming U.S. politicians like Cynthia Lummis, again, incoming Republican senator in Wyoming, that are very knowledgeable about these subjects. I would say we're pretty good relative to not being too overbearing yet in the US. There's countries that are for sure worse about the opportunities for not just Bitcoin, but the things we're talking about today. And even in Europe, there's some countries with pretty stifling, off the top of my head, regulations, France, the Netherlands. And this is taking smart people that are creating jobs, generating tax revenue, and basically causing them to look at other opportunities with countries that are going to be more open. Are you familiar with the global outlook for the things we're talking about? And let's be a little positive. Some countries that have been on the forefront and have been even better than us here in the US, pound for pound.
So, Asia has the lead over the U.S. I will say the U.S. has actually done a pretty good job of fostering innovation, not
pretty good. Yes.
The industry. Absolutely. They could have really caused damage several years ago. And now that we have a blossoming industry here, I think, it's going to be more about regulatory clarity rather than just a regulatory, stamp down. Globally, Japan is really starting to take the lead in cryptocurrencies. They see themselves as being able to be the center of this new asset class. Japan has a long history in the financial markets. The Japanese yen is the most traded fiat currency in the world. So they do sit at the center of a lot of the financial markets. They're really being innovative with what they're doing. And I think importantly, and this is what a lot of what the US regulators have done as well, is they have focused less on stifling innovation and more on saying, listen, let's try to root out the bad guys. Let's try to make sure that these exchanges are safe and people feel comfortable and they're not going to lose their money. And let's try to root out some of the illegal things that go on with this. And yeah, it takes a little bit of regulation. Yeah, you have to sign a couple extra papers and let people know about things. But that's part of just the global adoption of this, and it'll bring more people in. So, I would say Japan #1, the rest of Asia #2. Singapore's taking a big role in that. The US is doing well. You mentioned Wyoming. Wyoming has some really friendly cryptocurrency laws. We actually have an office there for our hedge fund because of how friendly those cryptocurrency laws are. A lot of the work that Caitlin Long, a lot of people will know Caitlin Long, has done really kind of set the table for this. Wyoming has their own crypto specific banks that are being developed right now. So something along those lines, that kind of framework to me gives me a lot of optimism that, we here in the US, we're going to be able to be innovative. And that's what we do, right? That's what the US does. The US is an innovation machine. It's a creation machine, creating jobs, recreating industries. Look at what Silicon Valley does. they're creating all kinds of new stuff. We might hate some of the stuff that they create after a while, but we wouldn't have all these things if it wasn't for all these, all this innovation. So, I'm pretty positive. I mean, listen, also, you never really want to short humanity. It's a bad bet to go against humanity.
We're getting a question in, maybe this will be the final one, from one of our live participants, Jim, asking, futures on the Coinbase IPO were up substantially today. What effect will its IPO of Coinbase have on the Bitcoin market?
Great question. So there's two ways, and I think in the long run, it's going to be unbelievably positive, because it is really a stamp of, okay, this is a real asset class. There are real corporations behind this. I mean, could you imagine, Angelo, in 2018, if we said, first of all, MicroStrategy did a bond offering. Imagine in 2018 saying there's going to be a S&P 5 or a public company that does a bond offering for $650 million, and a investment bank in the US is going to participate in that. And by the way, they're going to use that proceeds to buy Bitcoin. We would have been laughed out of the room in 2018 if we suggested that. So the idea that Coinbase is now coming public, I think it's just really positive for the ecosystem. That being said, if I look at the risk of it, it may sap some of the demand for Bitcoin, in that, if I'm a pension fund and I say, okay, I quote unquote don't understand Bitcoin, but I understand stocks, I'll get my Bitcoin exposure through Coinbase. That may sap some of the demand. I don't know, but one saying we have in my office is, you never get hit by the bus you can see. You always get hit by the bus you can't see. And so I'm always looking for that bus, and maybe it's some demand goes towards Coinbase as opposed to Bitcoin.
And do you think it's inevitable next year, the year after, that there will be an ETF? And will that be impactful to hedge funds in the community?
I think it's inevitable. I don't know when it'll happen. I think it should happen. My view on it is that it would be an incredible way for people to safely, securely get into this asset class. We're a hedge fund. We can only accept accredited investors and up. I've never agreed with that accredited investor definition. There's a lot of people that are very smart that should be able to buy into this, and sometimes they're forced onto exchanges and places that they probably shouldn't be, and they end up losing money, all because we don't have an ETF for Bitcoin. So I think that would really help. I mean, listen, if you have an ETF for Bitcoin, it's going to open up the IRA market. It's going to open up a lot of different things. So, I'm kind of a dinosaur here in the crypto world, and a lot of my friends are dinosaurs. We're old. And a lot of my friends they ask me every day, so in my brokerage account, how do I buy Bitcoin? I'd love to buy a little bit. I'd love to throw 10 or 25 grand at it as part of my portfolio. And there's not that real efficient way. I mean, Grayscale does well, but the problem with GBTC is you have this big premium over the NAV. So it would be great if we had an ETF. I think it'd be incredible. It'd be fantastic for the retail investor, and there's no reason why the retail investor shouldn't have that type of access to this asset class.
Yeah, I mean, I think you really nailed it. Once investment advisors, RIAs, are able to recommend it, probably whatever 1 to 5% of a portfolio, and easily do it and feel comfortable and safe via an ETF, that should be an explosion in the market. And inevitably that's coming. Just again, we don't really know when. Well, you've been very kind, BK, with your time. For those that would like to learn more about you and following you, whether it's social media, and learning more about your hedge fund, assuming, again, they're an accredited investor, how could they learn more and do so?
Yeah, well, you can find me on Twitter at BK Brian Kelly. Our website's bkcm.co. However, we don't have a lot of information on that, but that's, again, just regulations. We're not allowed to have a ton. But you can find us there. We have an info at bkcm.co. You can send us an email and find us that way as well. And also you can get the old fashioned way, you can call us.
Did you want to give a generic number out for the company, or they can look it up online?
Yeah, you can. It's a 646-838-4501 is our main line. And we're always checking that.
Perfect. And everyone, as I wrap up, a reminder that in talking about investments, and certainly this is an asset class, broadly speaking, that could be an investment, you need to do your own diligence, understand your risk tolerance, your liquidity needs, and everything that's impactful to that. This is meant to be educational. And again, this changes so quickly. It's late December now. In a month, things could be very, very different. So it's meant to be educational and somewhat entertaining, I hope, at the moment of time that it was recorded. But you need to absolutely do your own diligence. And a lot of this is volatile. And in theory, you could lose all your money. So make sure to do your own diligence. Everyone, I'm Angelo Robles. I'm the host of the Angelo Robles Podcast, and I'm the founder and CEO at Family Office Association. We're a global membership organization dedicated to families of wealth and their family offices. We do a tremendous amount of original proprietary content. We do thought leadership in our physical events where we're still selectively doing some very, very small and doing a lot of digital programs like today, much of it exclusive to our members only. We also provide a level of hand-holding, consultative services, mainly around creating a family office and reinventing yourself, I guess you could say, during today's times. I'm very active on social media, mainly lately YouTube or simply Family Office or Family Office Channel. And our website is FamilyOfficeAssociation.com. And my direct email is Angelo@FamilyOfficeAssociation.com. BK, thanks so much for your time today.
Thank you so much, Angelo. I can't wait till we see each other in person again.
It's coming soon, sometime next year.
Yes.
Okay. Thanks so much. Bye-bye.
Thank you. Bye.